Futures look strong as markets wait for Fed minutes, jobless claims, and ECB President Mario Draghi's response to questions about the latest news on ECB bond buying plan. Romney scores big in last night's debate as President Obama held back. Can markets finally break out of this holding pattern? I'm Taylor Schrantz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with TheStreet, and together we bring you the Morning Call Express. It's October 4th, a very key date in terms of the way the markets have capitulated off that low, for lack of a better term. But we have to see if we're going to get out of that range that we've seen all week. Following the debate from last night, we have natty numbers today. We have same-store sales for September retail, and we also have Fed minutes. We have a lot to look at today.
A lot to look at, and what we've been looking at is a range-bound market digesting huge moves since June 4th, huge moves, like you said, since last October 4th. So I want to go right to the chart. Today is the anniversary of this outside day. This was the day the market reversed. This was October 4th. We are a year later, and we are about, 350 handles higher? More recently, we've been talking about this consolidation. When can we continue or get back in motion to take out the highs? So today the futures are opening up about 5 handles. Take a closer look. I do think it's very important if we can finally break above, just say 1460 and hold above it. Maybe the debate last night was enough. Maybe Romney's strong showing is showing a new direction for the country. The country. Actually, we'd like the company to be running the country, the private sector versus the public sector, but we won't get into that right now.
That's a debate for another time. Moving along to the sector spotlight, we're going to take a look at my 2012 pick, the Ags, in particular the fertilizer space. They're having a little bit of a tough week. We have some earnings coming out. There's a little bit of concern there with supply and demand and inventory, but you have to remember, guys, from a seasonal perspective, Q4 is really when these names take off. That fall and spring application story is really going to be key right now, especially going to 2013 because so many farmers got killed this year with the drought. Let's take a look at MOO, the ETF for the group.
There you go. Let's just go right to the chart because you know the fundamentals. I'll show you the chart. Ever since the low in June, it's been a nice move to the upside, or a moo to the upside. Well, here is that breakout right here. Here's your peak. Lately it's been a little lethargic or showing a little relative weakness, but still above the 50-day, still above the 200-day. Closed weak yesterday. This is a line of support. I would say watch the 50-day, and if you did sell into some strength, why not buy a little bit back around 50.74, especially if you think the fourth quarter is going to be very powerful.
When Scott and I dive into the trenches, we're going to look at some of the financial names. There's a lot of big banks there, Citi, JP Morgan, Goldman Sachs, trading below tangible book value. That's typically where you find some support. So I think from that alone, you're going to see some nice movement going into Q4, along with names like MasterCard and Visa. MasterCard had that explosive action this week.
MasterCard and Visa have been acting well. Technically, they've been awesome for the past few years. I want to show you what a great chart looks like. Look at the chart of MasterCard right there. Pow. New highs, you can make money, you could be a stock picker. Buy area number 1, consolidation, buy area number 2. Visa, same thing, buy area here. Here's your new highs. And like you said, the other big banks are actually starting to look good again. Look at this consolidation in JP Morgan. I think it gets above this 41.50. It can continue. I think Goldman Sachs has changed its composure, looking like it could break out above, just say 118, 119. Look at Citigroup yesterday, breaking above this little consolidation. So there's still some opportunities in the banks, and I definitely think equities are far from dead.
All right, and let's wrap up the Morning Call Express with T3's favorite name to trade, that being Apple.
Yes, well, Apple held a 50-day 2 days ago. It was good to see some follow-through support yesterday. I do think, 674 to 676 is going to be a little difficult. You take a quick look at the chart. Some people are saying this is a bearish setup, that this could be a head and shoulders top. I am not agreeing with that yet. All I know is right now, if you sold it around 683 when it broke the 21-day, it was a really nice buy here at the 50-day. Yesterday, you got your follow-through, and now this will be a little bit of resistance. So as a trader, maybe you sell some, and then we'll see what Apple does moving forward. But you've made a lot more money being an investor long Apple versus thinking that the game is over. All
right, well, we got a lot to look at today, guys. Have a great day trading, everyone. Catch Scott at the end of the day every day as he wraps up the charts for us on Options Profits, Real Money Pro, and T3Live.com.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The 2-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit T3Live.com and click on the Education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.